Good morning, everyone, to Market Insights. This is Landmark Title's monthly webinar. We do this every first Thursday morning at 9:30. We bring you the best in market stats from the best ARMLS specialist that we all know, Scott Kiburz. Scott brings great information. We go over not only just what's going on with the market stats, but we dive even deeper into them. So, Scott, I'm going to hand this off to you and let's get this running today.
Thank you, Sarah. Good morning, everybody. Lots changed in the last 30, 60, 90 days in our market. Let's get going with the fast facts. Thank you, Sarah. First and foremost, as of the 1st of August, there were 14,198 active listings in Maricopa County. Now, we did tip north of 11,700 in single family. Townhomes did reach over 1,000 at 1,055. Condos, 812. Manufactured homes rose from an average of 250 to 331. Solds are significantly down. We're at 4982 for the month of July. Big standout, ladies and gentlemen. Our initial thrust of inventory has pushed our absorption rate down from 100% this time a month ago to just 33.65 as we begin the month of August. Coming soon, it's been running in the mid 7s and 8s. It's down to 602. Interest rates, ladies and gentlemen, everybody knows we had a raise by the Fed in basis points, 0.75 last Wednesday. Ladies and gentlemen, all indications are no significant impact on rates for buyers. We're even hearing a little teaser of some being in the high 4s, sub 5. So please know that's still bouncing between 4.8 and 6.2. Our average sale price last month, $547,162. Those are the fast facts. And if you know them, nothing else, ladies and gentlemen, that's good knowledge to obtain and put into your long-term memory. Sarah, let's move on with the next slide, please. So, ladies and gentlemen, I've used this slide several times now, but just to point out what I'm going to call the ridiculous. John Burns, the 4 big influences in the real estate world are government, economy, technology, societal shifts. Ladies and gentlemen, we have elections this week. The economy, some people say we're in a depression, recession. We certainly have increase in interest rates and inflation. Technology, I'm hearing rumors that they're going to pass another $80 billion fund for chip technology. We're fortunate in our community to already have the Taiwanese plant going in North Phoenix at $12 billion and the Intel plant, 2 of them going in at $20 billion. There's going to be another multi-billion-dollar spend nationally for chip technology. Societal shifts, still a lot of that's happening. So those 4 big influences have massive influence happening. I just want to restate the obvious. There's common sense there. Our market is more volatile or has more change happening than ever. And now we'll go to the next slide. This caught me as being really funny. Real estate agents under 8, under 2, and over 10 years in the real estate industry. And if you look hard at the very bottom of this slide, you see a thumbs up by one Kenny Parcell. And Kenny Parcell, effective November of this year, will be the NAR president for the whole nation, 1.5 realtors. And he gave it a thumbs up when this first came out. Ladies and gentlemen, it's just a matter of experience, having to work with interest rates over 4%, having a much lower absorption rate, having to be competitive. Sometimes we have to ask our sellers for a price markdown. Sometimes we have to do seller concessions. All those things are happening. If you're a realtor less than 3 years, you probably haven't witnessed that. It's a change in the market. The irony is the person with the most experience there is like, oh, we've been there and we've done that and we can manage through that. Sarah, the market itself, here we go. So I wanted to do some simple math for you. If we go back just a few months, 4 months, in fact, we averaged around 4,000 active listings in Maricopa County. There's 153 zip codes. which works out to a run rate of 26 listings per zip code. Ladies and gentlemen, we've been running since May of 2020, less than 30 days of inventory. An absorption rate peaked at 240%, meaning we sold every listing this month, next month, and part of the next month, all in the original month. What I'd like to share with you is if I only have 26 listings per zip code and I have 100% absorption rate, all 26 of those homes sell in 30 days or less. As we just reached over 14,000 active listings on Friday last week, between 153 zip codes, that works out to 91 listings per zip code. And that's now worked into our absorption rate at 33, 34%, give or take. Ladies and gentlemen, that means I have 100 homes and an absorption rate of 33%. 33 of them are selling and 66 are not. Well, guess what? There's more listings coming next week or next month and the next month. And so what happens if we go to the next slide, Sarah, you could be working with a seller who's like, hey, I'm in the middle, or hey, I'm more of an expensive home in this subdivision because there's 100% absorption rate or higher. If I don't sell this week, this month, I'm definitely going to sell the next month. Well, when there's 90 plus listings in a zip code and only 33% are selling, and the next month, even more listings come on. If you're not priced in the market, you could be what's called no man's land. And otherwise, too, you might be completely out of the market. If there's 10 or 15 homes in a subdivision that are for sale, and you're always 8, 9, and 10, you might be out of the market and not sell in the next 2, 3, 4 months. Sarah? So here's a basic slide. It's just numerics. We're looking at number trends here. What I'd like to point your attention to is line 1, total actives in the MLS. That's every listing in the MLS, including Sholo and Tucson and everybody who puts their listing in our MLS. Just back in April, we had 6,640. Today, essentially August 1st at the end of July, 17,790. That's 3 times, basically, a 300% increase in just 90 plus days. If you slide down to the middle of the grid, I want to point out the coming soon has gone from 7 or as high as 8 down to 600. I want you to see pendings that have been running at a rate of mid 5s down to 4,012. Total solds gone from 9,200 to 6,100. Total Maricopa County 4,980, and total single family is sub 4,000 at 3,859. That is a big indicator of where our market of the moment is and the slowdown we've had. And thus, if we keep bringing new listings in, that's what's pushing our inventory up so quickly. We haven't seen that level of inventory in almost 3 years. Sarah? So this is an illustration of the first. We're at 14,252 for the day and 6,164 actives. What I'd like to point out are 2 things on the lower part of the graph. The red and blue dotted line, we are now officially, as of today, both the median and the average sale price today are below 100%. That's important to know. And the average is now in the high 99, but it's definitely below 100. Ladies and gentlemen, just something unprecedented, and I should have blown this graph up even bigger. Price per square foot the last 24 months. You can see the month of May, both the blue and the red line, average and median sale price, peaked in May of this year. And that effective June and July and soon to be August, that trend line is coming down. Sarah? How much is it coming down? Well, here's the illustration of absorption rate. The blue line represents the month of supply. We went from 2 to 3 months of supply almost overnight. That is real. That's that dotted blue line on the far right. Also, the red vertical graph is the absorption rate. That has gone down to 33%. And we have not seen it that low really since January of 2019, since it's been in that area. So on the far left of the graph is more like what we see today, be December of 18, January of 19. That's the market of the moment we're playing in as we speak. And the good thing about this particular graph is we can see the historic trend. Sarah? Coming back into all of Maricopa County. So again, this is a broad overview, all Maricopa County. Our listings are up 150% from where they were a year ago, August 1st. Solds are down 34%, and home prices are still up in the last 12 months, 16.9, almost 17 from where they were this time a year ago. Our month supply is right at 3 months, and days on market are currently at 27. That is all Maricopa County aggregated together. Let's take a deeper dive. Sarah? So when we look at the data that supports the infographic, I want to point out the top left green arrow, active listings 14,252. Look right inside right below the word active listings. So we've got in the last 30 days, our inventory is up 27%. In the last 90 days, our inventory is up 183%. In the last 6 months, it's up 311%. And a year ago, it's up only 157. But we've had a huge surge in the last 6 months of inventory. Under contracts, it's down, but it's down 20%. It's not massive. Sold listings down here 24% at 4757. And look, ladies and gentlemen, do some quick math in your head. Sold listings at 4757 versus new listings 9616. That's more than 100% more growth in new listings versus sold. Now, an interesting data point, if you could pull that out, ladies and gentlemen, you would see the data a little bit deeper that says, hey, of 37%, give or take, of the homes listed, the lister, the seller, has owned that home 2 years or less. That it's a significant, not quite 40, but a high 30% of the current listings are somebody flipping out of the home or has been an investor, owned it, and needs to sell. Sarah? So what we did here is we just took a pause. So instead of looking at all of Maricopa County as one, we just wanted to do a quick regional overview. So the West Valley cities is made up of Buckeye, Peoria, Glendale, Avondale, Sun City, Sun City West. There's 8 cities in this West Valley city report. And I want to point out that their active listings are up 229% and they're up 19.2%. And they have just over 3 months inventory. Now, the same thing happened in the next slide, Sarah. We took a look at the Northeast Valley. So their listings are only up 105%. They're up over 21 in the last 12 months, but their inventory is 3.5 months, not 3.0 months. As we go to the next area specific, Sarah, Southeast Valley, their actives are up 177%. They're up 17% in their median sale price. And their inventory is not 3%, month of supply, not 3%, but just 2.75. So we wanted to point out to everybody that there is the overall metro, then we can look at an area or region, and then we can get down to the city specific. Someday we'll be able to get down to a lot block as well. Not quite yet. Sarah? So just trying to give some graphics that your buyer agents can use, your listing agents can use, and just quickly illustrate the market of the moment to whoever your client is. So this first slide is current listing summary of active listings. The green vertical bar up and down is the number of listings available. Well, what you can see is in the last 2 months, our listings have gone from over 10,000 to over 14,000. And just go back 90 days, we had about 7,500, give or take. But the number of active listings has surged in the last 90 days. Again, as we looked at John Burns' issues, boy, we had inflation. We've got a war in Ukraine. I mean, there's all these different influences happening, the political environment, etc. Roe versus Wade. I don't want to be dramatic here, but they're having influence in our real estate market as well. So our inventory has gone up and over 14,000 active listings. Then when you look at the average dollar per square foot and the median dollar per square foot, median we've kind of leveled off for the last 90, 120 days, but the average dollar per square foot in the black line at the top has been trending down since basically March. We peaked there and it's trending down. So that is just a great awareness slide there. Sarah? Still got me, Sarah? There we go. Sold listings. So this is what, it's not what it's listed for. It's not what it's under contract for. This is the sold price. And so I want to point out here again, sold volume. We hit a low in the last 24 months. It's just over 4,000, not quite 5. And so that has changed the number of homes being contracted and completed over the finish line. Also, the average and median sell price has been trending down. And that's a great visual to see and coach, teach, and mentor with your clients. Sarah? Cumulative days on market, far right, of course, average and median, slight trend up as of May, June, July. Sarah, next slide. Sell to list price. So some quick data, ladies and gentlemen. If we go back to the month of June and we only look at closed listings for the month of June, 29% of those listings had a price reduction, whether it's $1 or something more significant, 29%. When we went from June 1st to July 8th, just getting through the 4th of July holiday, that went from 29 to 31%. We just completed July, obviously. 49% of all the listings that closed in the month of July had a price reduction from their original list price. It's good information to know. That has been a trend happening. Sarah? Wanted to point out this slide here. This is the active listing supply. And I made this as big as I could for everybody. Stay to the left and look at the green arrow surging up from January to July, and we're just under 15,000 listings. Now, this is a long-term graph, ladies and gentlemen. This goes back to 2016. It's essentially a 6-year, 5-year graph, 6-year graph. We were used to 2016 all the way through July of 2019 of having north of 10, 15, 17,000 active listings. And that seemed like a pretty reasonable market. When COVID hit in March of 2020, 2 months after that, we went below 1 month of supply, and we stayed there for, gosh, almost 2 years, just over 2 years, until the last 60 to 90 days, and our inventory has shot up. That, more than anything, we're getting back to a comfortable place. Number one, the part that I want to share with everybody, it's how ferociously fast we've shot up to that number. That is where some fear comes in. That's where a lot of education between the listing agent, the buyer agent, and their clients, and bringing a strategy, observing the market, making a decision on what the next best step is, and taking action. If you need a price reduction, take action. Get in the market. Sarah? Okay, again, supply versus demand. Green arrow on the left is month of supply. That's the same graph we essentially just saw. And then absorption rate. So you see the black line coming down. So absorption rate peaked at 270% somewhere around January, February of 2021. We had been running at north of 100% for gosh, 2 years. That has, for the first time, even just 30 days ago, July 1st, we were right on the nose at 100% absorption rate. If we had 25 homes in a zip code, we sold all 25 essentially that month. Right now, we've zoomed way down to 33%, and this graph illustrates that. Sarah? Some other data points here that are noteworthy that I want everybody to see before we get into the city-to-city breakdown. So this is just designed to educate the buyer agent, the listing agent on the market at the moment and see it visually. So active listings, the total number of listings, you can see here in the last 4 or 5 months, we bottomed out essentially February of this year at 3,260. And here we are just a handful of months later, and we're at over 14,000. And that surge is visible there with this graph. Sarah? Under contract, you're going to see here some dips, and the first 2 dips in the 9,000, 8,000 have been essentially the month of December. We're used to that slowdown in the holidays. People want to stay in their home through the holidays. But ladies and gentlemen, the last 2 months, it's not December, it's June and July of 2022. And we have pierced below our December low average. So this is a number under contract. Now, ladies and gentlemen, that's not the number that closes, that's under contract. Just in case we're seeing a 10, 15, some areas are experiencing a 30% or higher fallout rate of contracts. Sarah, this next slide is showing closed. And again, looking at the holiday, the 2 first dips, December, January, last month to the far right, ladies and gentlemen, 5608. That's the total number of closed listings for everything in the MLS, 5608. Okay, Sarah. So new residential listings. So you saw this start to take off in February, March, April, May, June. We kept adding more and more doors to the marketplace. We peaked right now essentially in June at 12,474. That's the total number of brand new listings. They had not been on the market any recent time. The month of July was not quite as hefty as June at 11,194. New listings coming to the market. So if our absorption rate is at 30% and we keep, another 11,000 coming, and we're only selling 5, well, we're getting 2 months of inventory come to the market when we're only selling 1. If we keep this rate up in the month of August and September, we can quickly get way above 15, 18, approaching 20,000 listings in our market. It'll go above 3% or 3-month supply to something more significant. Sarah? Temporary off the market. It's not a huge increase, but it is an increase. Just looking at the far right-hand gauge, we had 1440 last month, temporarily off the market. Hey, I want to make sure I'm doing the right thing. I was getting my house prepped. I'm not quite ready. I want to get it off the market and make it even nicer than it was so that when I go to market, it's as good as it can be. Temporarily off the market. We're going to watch this. If this number were to go to 3,000 or higher, that's a different signal, just so you know. Sarah? Also expires. So the 2 spikes that you see in here at north of 400, of course, that is December. Most people, if they write a listing agreement, a lot of times they have that in December 31st, and that is the expired listing contract. Please know we're not there yet, but we have had some listings expire. 366, in fact, for the month of July of this year. Sarah? Canceled. Okay, some people said, hey, I want to step away. I'm going to stay where I'm at. I'm going to do something different with the house in terms of its fit and finish and come back to the market. It's not a huge number. This one number, canceled, if this number spikes, that is a different signal than all the others. People are just canceling and pausing, doing whatever. If this number were to shoot to 3,000 or above, we would have different messaging in this meeting and to our agents for sure. Sarah? Okay, this is Scott trying to be dramatic, and Scott loves numbers and Scott loves slides. And so this is Scott trying to convey a good message to the audience out here. Ladies and gentlemen, the top line in the blue squares, we have 252 active listings in Maricopa County. We sold in the month of July 5,388, and we had a under contract amount of 6,164. Now, what we're going to do for this slide and the next is we're just going to look at the far left column and the far right column. And what I want to illustrate is under contract and also the movement of inventory. So if you look at the middle lane and you look at the second green arrow on the left, you say updated today, but it just inside of that, it says 30 days ago. 30 days ago, on July 1st, we had 11,160. And on the far right, 30 days ago, we had 6422 under contract. So 250, 300 doors lower is not a big drop, but that's the under contract run rate. Drop to the bottom line, you see the green arrow saying, hey, it's an increase of 101% of what we have at the top line of 14,252. And that's going back just 60 days. 60 days ago, we had 100% fewer homes available at 7071. Yet our under contract today is 19% less than it was 60 days ago, 7679. My point to you, ladies and gentlemen, we were under contract in the 6 and 7s. At the same time, we're growing from 7,000 to 14,000 active listings. If we go to the next page, it's going to be more dramatic. Sarah? 90 days ago, not that long ago, we had under 5,000 listings. The next line down, 180 days ago, 6 months ago, 311% fewer listings, 3,465. A year ago, 5,532. Also, if you look on the under contract to the far right, we're in the 7,000 and 8,000 under contract. Ladies and gentlemen, when you have, and the top line of this, when you have 4,973 active listings and you're under contract at 8,102, you're selling, absorption rate's 160% at that point, give or take. There's a strategy for that. Sarah, if you'll go back one slide, 14,252 versus 6164, ladies and gentlemen, that's where your 33% absorption rate happens. And there's more choice for the buyer. The seller may be doing a seller contribution. That's a conversation where a lot of us are having with our lenders. Seller might be so inclined to provide a home warranty, have to fix some things. It's a different market. And so what I'd like to convey to you, ladies and gentlemen, this isn't I win, you lose, and I'm a buyer and I'm so tired of getting beat up by the sellers. It's an opportunity to cooperate, provide the ability as a buyer to perform and sell. And it's also an opportunity for the seller to go, hey, I know my neighbor got a really great thing 6 months ago, but that was so 6 months ago. Our market has shifted, and I created these 2 slides, hopefully to give you a visual of that. There's different tactics, different conversations, different strategies that happen as a result of this higher inventory and candidly, a lower close sell amount. Sarah, let's jump ahead 2 slides. Okay, so sold by price. What I wanted to illustrate here is this. In the 3 to 5, 5 to 7,000 price point, that's the lion's share of our market. And then the next key price point is $700 to $1 million. Now, please know 5 to 7 and 7 to $1 million, they're up 37% from a year ago. Also note that 3 million and above is still up 5%. It used to be if you were in the 585 range, you were in the top 10% sell price of homes in Maricopa County. That's gonna put you way deep in the middle today. Sarah? Okay, sold by price point breakdown. Again, it's validating a little bit, but there's been a shift. If you look hard at the 2 pie shapes, in green is the 3 to 500,000. On the right-hand side, you see that green was 42%, 42.55% of the market a year ago. Today, it's 44%. The 5 to 7 was 30%. Today, it's 28%. This is where we start to etch up ever so slightly. In the 1 to 3 and above, those percents have risen ever so slightly. Our market is changing. Our prices have gone up into what a lot of people consider elite status in terms of prices for homes across the nation. When I say elite status, I'm talking San Francisco, New York, Chicago, San Francisco, LA. We're certainly getting up there in our price point. Sarah? This is by the price point range, and what I want you to focus on is in the gray towards the bottom, in the first category, month to date, but even though this is the beginning of the month, please know that none of the homes that have closed are above 100%. That is illustration of the market of the moment. And the biggest negotiating piece is in the 3 million range, where it's just not quite 5% off full list that they're experiencing. Sarah? Okay, so now, ladies and gentlemen, we go from the letter A, Apache Junction, all the way to Tolleson. I believe there's 18 to 21 cities. And this will give you more of an idea of what's happening in terms of active listings. So if we just stay on this one slide and close up, Sarah, active listings in Apache Junction are 114% higher than a year ago. Solds are down 31% compared to a year ago. Even today, August 1st report, today go back 12 months, home prices are up 15% from where they were a year ago, but they're definitely not going up as fast. The next one is month of supply, 2.38 months. We know that all of Maricopa County is now at a 3% month of supply, and our days on market in Apache Junction are 31. A year ago was just 25. So Sarah, the rest of these slides are the individual cities, and you can, when we share this out with anybody who would like this data, or the business development people share this, they can see what's happening in various cities in the market at the moment. I hope this kind of information is helpful to your business development people and to the agents that are reviewing this. It's got a pure intent. There's been big change in the market, and it's important to ask the hard questions and to take action on this. Your team, as always, Sarah, thank you for the hospitality and the quality that you guys deliver, and make every escrow bulletproof, meaning cross all your T's, dot all your I's. In a market like this, you don't want to miss anything, because it leaves either money on the table or a reason for somebody to cancel or seek an earnest deposit. Bulletproof your contracts today in this market.
Absolutely.
Sarah, that's as fast as I could go for you today.
That was awesome. And as always, everyone, please reach out to us for the recording of this presentation, copy of the slides. We have all of this available. So just reach out to your business development manager. If you're not already working with them, please reach out to myself, Sarah Touchstone, sarah.touchstone@ltaz.com. Be happy to introduce you. And we also have the market snapshots available shortly after market insights as well. So of course, thank you to Scott Kiburz for coming on, giving us all that good information. And thank you to Landmark Title for allowing us to bring you market insights the first Thursday of every month. And please know that we are here to help with all of your title and escrow needs. We have 7 offices across the valley, as well as 1 in Prescott. So please think of us, and we'd love to help you on your next contract. Have a great day, everyone.
Thank you. Thank you, Sarah. How'd we do? Everything good?